today's topic is how to get ready for accounts finalization. I think this is the right time to learn about accounts finalization. So myself, Manikandan, I'm the Chief Knowledge Officer at Asset Integrated Info System. So this session is organized by Asset Integrated Info System. We are the #1 5-star Tally partner in Telangana and Andhra Pradesh since 1997. You can find all your solutions related to Tally software, Tally services, TSS, and Tally TDL, Tally integration, etc. And you can reach us through www.assettally.com. So today's topic is, what is accounts finalization? Of course, theoretically, it is not defined in the accounts book about the accounts finalization, but practically, when we are working on accounts for the whole financial year, at the end of the financial year, we have to ensure that all the entries related to our accounting activity is completed, and we do all reconciliations. If there is anything wrong with the transaction, if anything to be adjusted, we have to make necessary adjustment entries. So that is the process involved in the accounts finalization. As I said, of course, it is not given in the theory part of accounts, but anyway, practically it is very important, because as we are supposed to submit our books of accounts to the tax authorities, we are supposed to ensure that all the records are correct before we submit it to the tax authorities. Otherwise, we'll end up with the problems from statutory authorities. Better we can finalize our books of accounts and then submit our records. See, here the important thing is we have to do from now onwards. See, most of the time what we do is we start from April, May, June, like that. But it is the right time to do it, because already we have completed 10 months. So we are at the 11th month. Now we have to analyze our books of accounts and identify the mistakes, so that this is the right time to understand the problems and rectify it, because still we have one more month. So whatever the bills not received or bills not issued, or the entries not accounted, or the transactions are not reconciled with the customers or suppliers or with the bankers, or the disputes within our vendors or whoever it is, can be resolved within this 40 days, right? But accounts finalization is a big process. We are going to discuss few points today. Okay, so continuously we are going to discuss about accounts finalization. Even at the end of March also, once again, we are going to discuss about accounts finalization. Right. So now, what is finalization? It's simply closing of your books of accounts. When we close our books of accounts, we can identify the mistakes and we can pass necessary adjustment entries, but it is not optional, it is compulsory. So especially for the companies having tax audit cases, they must do the finalization before they submit their records to the tax authorities. So for others also it is compulsory. It is not only that accounts is not maintained only for the external reasons, it is also for the internal reasons. The management wants to identify their exact profit. They want to correct their books of accounts. Okay, so it is very important to do the reconciliation before we submit the records to the tax authorities. Right. So in this accounts finalization, I have 3 simple topics. 1, identifying the completion of data entry. We have to ensure that all the data are entered properly. Number 2, performing reconciliations. Reconciliation in the sense, most of them are thinking that it is about bank reconciliation. Not only the bank reconciliation, it is about cross-checking the records from our books of accounts with our vendors, customers, loan providers, and all other third parties who's involved in our books of accounts. And finally, verification of statutory compliances. We maintain books of accounts, we do all our statutory filings, and finally we have to ensure that whatever is there in the books of account is matching with the records which we have already submitted with the tax authorities. So it should be equal. If there is any difference, at least we should try to match it at the right time. Or if there is any mistakes, it is still continuing, you can rectify through the revised returns also. So that is what is verifying your books of accounts with the statutory compliances. We will see it one by one. I have mentioned everything in the steps. We'll go with the step 1, that is completion of data entry. This is the first part of accounts finalization. Okay, now you have to complete recording of all business transactions. See, of course, we complete the financial year on 31st of March. I agree with that. But even after the 31st of March, we get some more bills from our suppliers, or some more expenses will happen which is relevant to the previous financial year. So we have to ensure that all the transactions are recorded properly in the books of accounts. So we have to collect the invoices from our supplier, and also we have to ensure that the bills are given to the customers at right time. Otherwise, there are two aspects. One, all our purchases will not be accounted. Number two, all our sales will not be accounted. One, our expenses will become less or our income will become less. See, it is not that we are not accounting the transaction. It is indirectly the mistakes which we are committing, and we will be treated that it's because of the tax evasion. Okay, so to avoid all these situations, we have to ensure that the entries are completed in the books of accounts. Now, after recording all the transactions in the books of accounts, if there is any mistakes we found, or if there is anything wrong with the transactions informed by the suppliers or the transactions which we are committed with the customers, we can do the necessary adjustment entries also. Now coming to the step 1, it is very, very important step, that is opening balance update. Okay, see, most of the time what happens is we maintain our books of accounts for the whole year, and we give the data to our tax consultants or to our chartered accountants. They do necessary adjustments. Okay, so they do finalization part and they make some changes which is relevant to the tax filings. Unfortunately, most of the time it is not updated in our books of account. So we will be continuing the data as it is, and the auditor office, they will be maintaining a separate record. Sometimes it happens to some organization. I'm not telling that everyone is happening, every organization it is happening. For some companies this will be happening. So what we have to do is we have to ensure that the closing balance of the previous financial year, for example, we are at the financial year 24-25, that means whatever the records are maintained for 23-24 is updated in our books of accounts as the opening balance. Okay, so it happens. So most of the time what we do is we split the company before the finalization is happening. So in that cases, all our corrections will be made on the old data and will be having a different data for the new financial year. To avoid this, now you check your opening balance for the financial year 2024-25. Okay, so ensure that the opening balance is updated as per the financials we have submitted to the income tax department. Okay, so we would have made some changes, some adjustments for the IT results that should be implemented in the current year books of accounts as opening balance. If you find any differences now itself, you just make necessary adjustment. And the thing is, it is not only that you are updating on the current year data as opening balance, you have to update in your previous year data also. So you just get information from your auditors, get the updated trial balance, just see what are the adjustment entries they have posted on the 2023-24. Ensure that the same is posted on your tally data also. See, now we don't find any problem in future, 1 year, 2 years later. If we get any notices from income tax department, they ask to submit our books of accounts. So the data submitted to the income tax department will be different, and the data which is there in the books of accounts will be different. So to avoid this complex situation, there is a high possibility we may not continue as an accountant for the same organization. So the new person may get into struggle. At last, we lose our credibility. Okay, so to avoid the situation, update your opening balance in the books of accounts. Right. That is a simple thing. You are going to refer the balance sheet which is given by the auditors, and you are going to update the opening balance. That's all. Number 2, structuring the capital account. Of course, whatever the suggestions I am giving, it's not that it is a rule. Okay, it is a practice. I used to say it is a best practice. In my experience, which I have learned from so many chartered accountants, I am guiding you to implement the same. So now coming to structuring the capital account. See, I used to see the books of accounts. What happens is you have to update the opening balance properly as per the previous year record. So in case of proprietorship concern, we can take it as a proprietorship concern, partnership and private limited company. In case of proprietorship concern, under the capital group, everything like the capital, drawing, LIC, kids tuition fee, or anything personally drawn by the owners for the personal use, whatever the expenses, sometimes they used to give donation to the private parties. Okay, so everything will be there in different heads. Finally, it should be balanced. The net figure will be reported on the balance sheet. Now, what you have to do is you have to check whether your balance sheet has an opening balance of the capital account as per the balance sheet. So this is nothing but the wealth of the proprietor. Okay, so whatever he has invested in the company or whatever the profits are accumulated year to year is going to be clubbed with the capital of the proprietor. So you have to ensure that the capital is accounted properly, because in case of future valuation and all, the capital is going to be the wealth for the proprietor. So you have to update opening balance of the capital. And then the next next important step is, after updating the capital account, you have to use separate heads for the withdrawals. Okay, say for example, in case of a proprietorship company, proprietor may withdraw some amount for the personal use, because they are not allowed to take salary. They'll be withdrawing the money for their personal use. Now you have to account it separately in the heads of drawings. Instead of accounting it in the same capital ledger, it is better to account it as a drawing. Sometimes proprietors may add some more capital during the financial year. In case of a cash crunch in the business, they'll be introducing some more capital for the company's working capital or fixed asset purchase, whatever it is. So it should be separately maintained as a capital introduced during the financial year. Similarly, in case of a partnership company, here we'll be having a lot of problem. So there will be one or more persons in the partnership company as a partner. So every partner will have a capital account. Sometimes for the emergency reasons, partners may withdraw some amount. So what happens is, most of the time we put it in the capital ledger. So sometimes some partners will be having a negative capital. So it is nothing but a mistake which we are committing. Okay, so what you're supposed to do is, you have to maintain a separate ledger for the partner's current account. Okay, in case of partnership firm, we usually have capital account and partner's current account. So the temporary transactions and the transactions related to the particular financial year should be accounted on the capital account. For example, partner's salary, partner's interest, interest on capital, and any other advances received by the partners, or any other amount given to the company by the partners should be accounted on the partner's current account instead of partner's capital account. Capital account should be a constant figure which is there in the balance sheet. The additional additions and deletions, receipts, payments, there's a temporary arrangements, everything should be accounted through the partner's current account. Okay, so this has to be ensured in case of a capital account structuring. Number 3, loan account maintenance. Okay, so this I'm talking about the loans which is received by the company. So usually we create the ledger and we group it under loans and liabilities. So that is a wrong pattern. So we can classify the loans as secured loans and unsecured loans. Hope you are comfortable on the secured and unsecured. Secured loans means we take a loan after pledging some assets. Okay, in case of unsecured loan, we get it from our friends and relatives without pledging any, without giving any collaterals. We get it for the goodwill of your face value. Now the thing is, you have to group the ledgers under the secured loans and unsecured loans group. Of course, you can group it under loans and liabilities directly, but in future, it is not easy to identify whether the loan is taken by secured or unsecured, or whether loan has an interest or without interest. Kind of a specification should be there in the books of accounts. So what we have to do is, we have to separate it as a secured and unsecured loans. So it is not only for that reason, even a tax audit companies, they're supposed to declare it in the schedules. Okay, so they have to classify and declare it, and it should be mentioned in the Form 3CB, 3CD. For that reason, when you are accounting, you have to classify the loans as secured loans and unsecured loans. Now, coming to the category of secured loans. So, secured loans means whatever the loans you have taken, you just mention the ledgers and the loan account numbers, etc. if it is taken from the financial institutions. Okay, so we take from financial institutions and we take it from the non-financial institutions also. So when we are taking it from the financial institution, a separate loan account number will be given, and you will be paying it as a EMI, either by EMI or only interest loans also. Nowadays, some banks are providing. So just mention whether it is a EMI loan or it is a only interest payment, repayment loans kind of a identification. Now, if it is a EMI loan, you can identify whether all 12 EMIs are paid for the whole year. There is a possibility due to the fund crunch, we may be missing out 1 or 2 EMIs. In that scenario, identify which month EMI is missed out and what is the penalty or the late fee or the additional interest is charged by the financial institutions. Now, suppose assume that you missed out 1 EMI. Instead of making payment on 5th, most of the time nowadays EMI are debited through ECS scheme. Instead of it is debited on 5th, if it is debited on 7th, 11th, because they used to resubmit and claim it again. Or suppose after 2nd and 3rd attempt, if the money is not available in the bank account, there is a possibility that financial institution may call and get the money from you, either by cash or check or whatever it is. Now, you have to collect the ledger statement from the banks. Okay, now most of the accountants are not following this. They think that they are getting amortization chart at the time of taking loan. So in this loan topic itself, we can discuss for 1 or 2 hours also, because we think that amortization is the only document we can receive it from the banks. Amortization chart is given by the bankers at the time of taking loan. Assume that we are taking a loan and 60 EMIs are given. The chart will tell you the 60 EMIs and its principal amount and the interest amount and the loan balance of the every month end. Now, apart from amortization chart, you can collect loan ledger statements also, because the ledger statement will say the opening balance, current year payments and the closing balance. In that current year payments, we usually, most of the time, we are accounting the EMIs. Instead of that, we have to account interest and EMIs separately. That is interest and principal payment separately. Principal's payment is nothing but the loan repayment, but interest is nothing but your expenditure. Okay, so you have to classify principal and interest. That is one thing. Number two, if there is any additional charges levied by the bankers, maybe the loan processing fee or some documents, failure of documents, they'll be charging some additional charges. There will be some hidden charges also. So if you get the loan statement, then only you can identify the amount debited from your account and the closing loan balance in the bank. Okay, so it should be updated as per the ledger statement as you received from the banker. So what happens is there are two problems you are going to face if you are not following this. One, you may not be able to identify the exact closing loan balance. Okay, that is very poor, because one fine day we think that the loan is completed, but the banker will call and ask for extra payments. Okay, that is one area. Another area, as far as statutory departments, that is income tax department is concerned, if you tell them that there is a opening closing balance of loan 14,80,000, if the department wants to get the information, they'll be asking you to get the loan outstanding statement from your banker. If they find some differences in your books of accounts and the ledger statement given by the banker for the loans, okay, so I'm sure the organization will be penalized. Okay, every mistake you commit on your books of accounts, every wrong information you submit to the tax authorities, it will not be treated that it's an ignorance or error. It will be treated that you are intentionally doing for a tax evasion cases. Okay, so to avoid this situation, better you maintain the loan account properly. So now in case of loan account, ensure that you receive an amortization chart at the time of getting loan account, and you account the EMI and principal and interest repayments not as EMI transactions, and you ensure that you collect a ledger statement. Just find if there is any EMI missed out and interest, penalty, late fee charged on the missing EMI, and you account it, and you ensure that the loan closing balance in your books of accounts is matching with the ledger statements which you have received from the bankers. Then coming to the fourth important point, that is creditors account maintenance. Okay, see, I have seen a company which is having creditors, suppliers for more than 100. Okay, see, creditors we can easily classify them. Okay, see, some of the creditors, so for example, the classification is like your trade creditors. Assume that I'm running a home appliances shop. Okay, so the dealer who's sending fridge, washing machine, and the home appliances whichever I'm selling in my business. Okay, the dealer who's sending all those materials are called trade creditors. Okay, they are going to send the materials to me, so they are treated as the trade creditors. That is a business. Okay, now what I can do is all my trade creditors, I can group them under trade creditors. I'm just talking about creating a subgroup under sundry creditors. Instead of creating all the suppliers ledger under sundry creditors, you can have a separate groups. Okay, first preference you can give it to the trade creditors. Then you can give a second preference to the service creditors. For example, my landlord, my telephone service provider, my internet service provider, my dish connection, because some of the shops will have TV on the visitors lounge, dish connection, courier company, travel company, logistics company. So everyone will be treated as your supplier, but they are not our priority. They are the second line suppliers. Our first line suppliers are the trade creditors. See, instead of keeping all the suppliers in one group as sundry creditor, better you have a classification like trade creditor and service creditor. Of course, nowadays in the tax compliances, it has become compulsory. You have to classify them. In that also, in trade creditors, for your company convenience, you can classify them in different way, like area wise you can classify them. For example, I've seen a company recently, they are doing a business pan India. Okay, they have a creditor system like state-wise, Tamil Nadu suppliers, Andhra suppliers, Telangana suppliers, kind of a additional subgroups they are creating. So it is a good system to create it. However, if you don't have much classification, better have at least a trade creditor and other service creditors. In the other service creditor, the advantage of maintaining the creditor's account in this manner is, in case of other creditor classification, you can ensure that these suppliers have given the bills properly. For example, you take the ledger of telephones like Airtel. So you can ensure that all the 12 months we received a bill. In case of electricity board, you can ensure that all the 12 months are alternative months you received electricity bills. Okay, so it is not only receiving the bills, you have to ensure that it is accounted in tally also. Sometimes, for example, I'm having an account with Airtel telephones. Okay, this month I have not received a bill. Okay, some companies will make a payment after receiving the bill. Some companies have the good habit of accounting provision entries, that is passing journal entries as soon as they receive the bill. But some companies, it is a poor system. Some companies, they will account it only after making payment, right? The best system is, as soon as you get a bill, you account it. Okay, in case of purchase, put it in the purchase voucher type. In case of other expenses, put it in the journal, so that it is ensured that all the bills are received and accounted. Additionally, you're supposed to track it on a periodical basis. In case of telephone, we have to get 12 months bills. Okay, there is a high possibility this month you would have not received a bill and you would have not made the payment. The telephone department or the Apple customer care will call and tell that they are going to disconnect the line. Immediately, the business owner will make the GPay payment to solve the situation. But the unfortunate thing is, there are many problems we are going to face because of this. The unfortunate thing is, the bill we would have not received, we would have not accounted, the money would have been debited from the proprietor's personal account. So finally, the transaction will not be accounted in the books of. See, if you miss one or more expenses, you just take 1,000 rupees or 2,000 rupees, whatever it is. If you miss accounting the expenditure, it's nothing but you are increasing your income tax liability. That means if the expenses are less, the profit will be more. If the profit is more, your income tax will be more. So to avoid this situation, you ensure that you are accounting all the purchase bills, and you have to identify the unreceived bills which is from your supplier. Even if the bill is not received and the amount is paid, you can pass a adjustment journal entry, and later you can collect the bill and you can file it. Okay, so you can receive a soft copy from the telephone companies, and you can pass the journal entries, and you can ensure that these kind of expenditures are accounted properly. Okay, so that is the reason you classify the suppliers first as a trade creditor and other service creditors. In case of a rent, in case of electricity, telephones, couriers, you know the periodicity of the invoices. Some places electricity is charged on an alternative month. In some places it is charged on a monthly basis. So you can ensure that all the 12 invoices are received. Okay. Now coming to handling sundry creditors. Okay, so categorizing the creditor is a main task, and apart from that, you have to ensure that the purchase bills are received. So what you're supposed to do is go to your balance sheet and check the sundry creditors group and ensure that all your creditors have a credit balance. See, finalization is not the toughest task. Okay, so what you have to do is, I'm teaching you the step by step. At least out of this, you try to implement 5, 10, 15. Okay, I'm going to teach you more of 50 points. Okay, in this session, I'm going to cover 10 points. At least out of 50 points, if you can implement 10 to 15 points, that's a great effort you are taking. Okay, so the thing is, you have to continue it for the upcoming financial year also. Okay, after you correct it for this current financial year, you ensure that the same is implemented for the new financial year from the beginning itself, so that you will not waste much time at the finalization. Most of the time in our experience, we are seeing that most of the accountants are getting fired, or most of the accountants are getting frustrated on the organization, or the business owner is getting frustration on the accountants at the time of finalization. Because for the whole year, whatever the mistakes we do, whatever the best practices we don't follow, we'll try to implement at the time of August, September, October. So what happens is we give the data to auditors. Auditors will identify hundreds of mistakes from the books of accounts, and then they'll give a feedback that the accountants' work are not satisfactory. So this is a situation. Most of the time, accountants are fired at the time of July, August, September. I'm seeing that because they're held up on the finalization work. Okay, and they are missing out the routine work. So to avoid this, you just try to implement now, and whatever you are trying to implement for the 24-25, continue the same for the 25-26 also. This is a time to rectify your mistakes. Now you ensure that all the bills are received from your supplier, so easily you can trace it out. Go to your balance sheet sundry creditors, and you ensure that all your creditors has credit balance. This is the first method to identify. Suppose if any of your sundry creditor has debit balance. So it is very clear there are two reasons. One, you would have paid advance to your supplier. Okay, now you can reconcile that particular supplier's ledger, and you can ensure that the advance is paid to the supplier. Sometimes you may know that the advance is paid to the supplier, then it is fine. Sometimes we would have made payment and the bills were not received situation, you'll be facing the debit balance. Right? If the creditor is having a debit balance, it's nothing but a mistake, or it's nothing but the advance is paid. Both you have to ensure whether it is a mistake of not receiving the purchase bill, or amount is excess paid, or intentionally be paid as advance. So to identify all these things, first you concentrate on the debit balances sundry creditors and do the reconciliations. You collect the statement from your suppliers. Okay. See, actually the supplier is supposed to give statement to the customers. Now you have to, as an accountant, for your collect the ledger statement from your suppliers and do the reconciliations. Okay, and if you find any mistakes on your ledger, for example, you made a payment but the supplier is not accounted, and you have received the bill and you have returned some material but the supplier is not accounted, kind of a missing out transaction, you can communicate to the supplier. Right? And then sometimes there is a high possibility you would have not received the bills and material, supplier would have accounted it. Then you can talk to your supplier, you can communicate to them. It is important to communicate with them in the email or the letter communication, which has the acknowledgement. Okay, so in case of letter, it's of normal couriers and all, better to have a registered post and you can communicate to them. So if you get some responses from them, it is better you get the responses, and if you want to make some adjustment, you make the adjustment so that your books are very clear. See, not only the loan statements, even if you mention some figure on your sundry creditors value, assume that for the supplier A, I'm liable to pay 15 lakhs. If that is a figure displayed in your balance sheet, there is a high possibility if the department want to scrutinize, they may send a notice asking for the letter of confirmation from your supplier. So what you can do is, you have to reconcile the ledger statements of your books of accounts with the statement which you have received from the supplier. Okay, and if there is any discrepancy, that should be communicated to the supplier at right time. So you should keep a copy of that, so that in case of future issues, disputes, either with the supplier or with the tax authorities, you can submit the relevant documents to the department. Alright. Now about the sundry creditors, next to that is sundry debtors. See, equal to your creditors, you have to give more importance to your sundry debtors. Like in case of sundry creditors, we receive the statement from them. It is our duty to send the statement to the customers. So what you can do is, sending the statement to the customer is going to help us in many ways. Okay, one, we can send the statement to the customer and we can ask them to ensure that the balances are same to avoid the future discrepancies. Say for example, in my books, customer A is supposed to pay 12 lakhs, but I'm sending the statement to the customer. Now the customer says, no sir, we have paid all amount, we are supposed to pay only 10 lakh. Now you can reconcile the books of accounts and we can account the missing transactions. right? We would have issued invoice, you would have not accounted it, and you would have made payment to us and we would have not accounted. Sometimes, they would have handed over some cash to the business owners, cash business, but business owners would have forgot it. So with this, we will be finding some differences. Better you send the ledger statement to the customers and ask them to reconcile, ask them to confirm the ledger balances. Sometimes accountants used to say, sir, I'm sending the ledger statements continuously to the customer, but I'm not getting proper confirmation from them. I'm not getting the acknowledgement from them. But that's not your problem. First, you have to send the statement to the customers. That is your duty and responsibility. Okay, not at the year end. Actually, you're supposed to send the statements periodically. You create an habit of sending the customers ledger statement either on a monthly or a quarterly basis also. Okay, then you can get a confirmation statement from your customers and you can reconcile it accordingly. Now, suppose you are not receiving the confirmation from the customers, you ensure that you're sending the mails or you're sending the letter communications, and you have to generate a ledger statements from Tally. There is a confirmation statement format also in Tally, right? So you get in touch with us. You don't know if you how to generate a ledger confirmation statement from Tally, because Tally is going to help us to generate a letter. Just a single click, you can print all your customers' confirmation statement with the address labels and you can send it to them for the confirmation. See, at least for the future correspondence, you should have the acknowledgement from the customers. Now, this is going to help you in another way. One is to have a equal records or to avoid the discrepancies or the receivables management. Another one, the statutory compliances. As I told you already, in future, if the department finds any mistakes on your books of accounts and if they want to scrutinize it, they may raise a query and they will ask you to bring the letter confirmation from the customer. Instead of searching that customer during that time, because we get the notices from tax departments after 2 years, 3 years, 4 years, 5 years also. Instead of searching such particular customers during that time, it is better to collect the ledger statement confirmation within the financial year itself. That is one thing. And apart from all these things, the third important area is insolvency. So if you are new to the word insolvency, just mention it in the chat box, or you can even communicate in the WhatsApp group so that we are ready to give some knowledge session on the insolvency. Okay, assume that you are keep on sending the materials to your customer. You are sending bills also, that is not a problem, but you are keep on supplying the material to your customer for credit. So customers will say that we'll pay after 3 months, 6 months, 9 months, 10 months, whatever it is. Okay, suppose if you feel that the customer is not making payment at right time, you may do follow up, and one day if the customer is going for insolvency, that means they may be surrendering to the insolvency officers and they will hand over all their properties, assets, stock, everything to them. The insolvency authorities will settle the amount to the suppliers. So in such cases, you should have the acknowledgement. Okay, if you don't have proper acknowledgement for the supply of material, there is a high possibility you may not get settled for the outstanding. So you have to get the letter confirmation from the customers properly. That is very, very important. And finally, if you find any credit balance on your customer's ledger, in case of suppliers, since it is a sundry creditor, you should have the credit balance. If it is a debit balance, some mistake is there. Similarly, in case of debtors, if you find debit balance, that is fine. If you find any ledgers with a credit balance, I'm sure there is a mistake on the particular ledger. There are two things. One, you would have received money in advance from the customer. If it is correct, then you can go ahead. That's not a problem. Suppose you don't have the system of receiving advance, then that must be a problem. You received money from your customer and you have not issued invoice to your customer. As per GST, receiving advance is also having some statutory tax complications. Okay, so when you are submitting your records to the tax authorities, especially to the income tax filing, you have to mention the advances received from the customer. There is a separate clause to mention it. Okay, in the recent amendments, as per accounting standards, you have to maintain a record of how much as advance you have received from the customers. Okay, so this is about maintaining the sundry debtors account. And coming to the seventh point, that is GST compliances. See, every separate step we can have a discussion for more than 1 or 2 hours also. But due to time constraints, we are discussing all the 10 points within 1 hour. Now coming to GST compliances. See, we generate sales bills, we account our purchase bills. Okay, we file our monthly returns, we make GST payments, we take input tax credits, everything is fine. But for the finalization, at the time of finalization, for the closure of books of accounts, you have to ensure everything is matching with the tax compliances which we have already filed. Okay, for example, you take month-wise, you can prepare an Excel sheet for the sales, month-wise April, May, June, July, month-wise sales as per our books, and month-wise sales as per our GSTR1, month-wise sales as per our GSTR3B, and you can find the difference. Say for example, already 10 months passed, even GSTR1 has been filed for January month also. Okay, so that means we have 2 more months. February month will be return filing on March return will be filing on April. Still we have 2 more months. If you find any mistakes, so why I'm urging it? See, this topic, instead of taking it in the April, May month, I'm taking it in the month of February itself. The reason here is, if you find some mistakes on your statutory compliances, okay, suppose in the month of October, I missed some turnover. I missed to add one bill of my customer worth rupees 1 lakh. Okay, so now November, December, January, and January returns also filed. Now we have a time to account it for the month of February. There are 2 things. One, you can give a credit to your customer, so customer will be happy. And number 2, and you can avoid huge penalties, right? Instead of October, now we are reporting in the month of February, that is already 3 months over. You are going to pay the GST liability along with interest. But instead of paying now, if you wait till September, October, I've seen so many companies, they find the mistakes at the time of IT finalization, September, October. That time they will make some adjustment, they will file the revised returns, then the interest rates will be more. So instead of paying 3 months interest, they are going to pay 9 or 10 months interest. To avoid this situation, it is very much important to do the reconciliations as far as GST at the right time. Okay, even if you do this kind of a finalization every quarter, that will be better, so that you can identify the mistakes and report it as soon as possible and with less penalties, right? And the differences should be accounted, and before that is identified by the department. That is very, very important, because if you find some mistake and you leave it as it is, there is a possibility your data from income tax department will be shared with GST, and GST department will reconcile it. And if they find the difference between your data submitted in IT and the data which you have already submitted in GST filings, if they find any differences, you'll be penalized. Okay, they'll send a notice claiming for a tax along with the penalties and interest. You know, the interest is fixed. Okay, that is fine, 1.5% per month, but penalties will be more. Sometimes for the tax evasion of 1 lakh, there is a high possibility you'll be paying a tax of 1 lakh and a penalty of 1 lakh also, because the authorities have the rights to charge the penalty as equal to your tax liability, right? So depends on the situation. So similar to the GSTs, we are going to consider the TDS compliances also. So in this TDS, I'm going to talk about the TDS to be deducted. TDS as our liability. I'm not going to talk about TDS receivable. That is different. Okay, TDS deducted. Now you ensure that you have deducted TDS for the respective expenses head. Assume that in your P&L you find some rent. Okay, you just see what is the total rent. Now you check if it is crossing 2,40,000 per 12 months. You know very well, for every financial year, the department will announce some different tax exemption limit, TDS exemption limits for rent, contract, commission, professional charges, etc. Now I'm talking about the financial year 2024-25. For this financial year, if the rent is from the one landlord, the rent amount is more than 2,40,000, or it is 2,40,000 and above, then you have to deduct TDS. No, sir, my landlord is accepting, that's why I'm not deducting TDS. You'll be facing serious consequences. If you don't deduct TDS for the TDS is applicable matters, okay, if it is crossing the threshold limit, then TDS is supposed to be deducted. It's not that your deductee, that is your landlord, has to accept or not. It is your responsibility to deduct TDS and remit it to the tax department. At least now you just check whether if the respective expenses head is matching with the threshold limit. In case of rent, 2,40,000. In case of commission, in case of contract, in case of professional charges, for every head there is a threshold limit. Especially for salary. Usually for salary, Most of the companies, they don't deduct on the monthly basis. Okay, but at the time of, this is the right time, at the time of February, March also, you can find and deduct TDS for the salaries. So you ensure that the TDS is deducted, and number 2, the deducted TDS is remitted. Number 3, once the TDS is remitted, the quarterly returns are filed. Suppose if you find some TDS is missing, okay, if you find the TDS is missing, so it's not a problem. Now also you can identify and you have to make the payment. Ensure that the payment is made with the interest, okay, and also you have to revise it in the TDS returns. This is the area most of the time we fail. Okay, so what happens is, at the time of finalization, at the time of filing of return, audit team may find that there is a mistake on deduction of TDS or remittance of TDS. They will be asking you to remit the shortage amount. Okay, so after remitting the shortage amount, it should be revised on the TDS returns. Otherwise, there is no use. It will not be declared to the department. Simply, you will make payment through the challans. Most of the time, this is the area we do mistakes. Making payment is not the solution. Once the amount is paid, it should be reported through the returns. Then only department can identify that the missing amount also you have paid. Okay, so otherwise there is no meaning of making payments. You make the payment and also you file the revised returns. So coming to income tax, so I'm not talking about the filing of income tax. As far as income tax, what are all the informations you have to update in your record? For example, there is a demand notice from the department. Okay, so you have filed return for 24, 25, 2021, 22, 23, and this is the last financial year, 23, 24. For that year or for the previous year, if you received any notice, okay, for the demand, that means department is asking to pay some amount as a tax, interest or penalty, whatever it is. Okay, so of course that will be discussed with your auditors. Auditors will be going to meet the tax department and they'll be submitting some records. So the scrutiny will go on, some cases will be filed. So, but what you're supposed to do is you have to identify whether the liabilities are raised or not. Okay, it's just a discussion or still the letter communication is happening, then fine. Or if the liability is already raised, okay, if there is a demand, there is a possibility they would have given 3 months time to make that payment or whatever it is. But you have to ensure that the same is updated in the books of accounts. Okay, because it's a liability, it's going to continue forever. If you don't account it, there is a possibility in future when you are meeting that liability, that's a big headache for you. So better whatever the demand is given by the department, you account it in the books of accounts also. If it is confirmed, then you account it. Okay, even if it is not confirmed, you can raise a contingent liabilities that is going to help you to identify the list of notices and list of demands we have received from the department. Most of the time, we keep it in the file. Okay, the letter copies will be filed safely, but it should be in the books of accounts also. See, I used to tell the accountants, don't think that you are going to be in the organization forever. Okay, even in your absence, the company should not source anything, you should not miss out any transaction. So there is a record you are creating by updating the liabilities in the books of accounts. So similarly, coming to the ESIPF, I know very well ESIPF, you know very well, ESIPF is something 100% related to your salary. So there are two things you have to ensure. One, in case you are calculating ESIPF for ESA and for the PF, there are some accounting heads are prescribed by the department. For example, in case of PF, the PF will be deducted on the basic pay, HRA, kind of a accounting head, dearness allowance kind of a accounting head. In case of ESA also, they'll be calculating ESA from the particular accounting heads. I think except for the overtime payment, they calculate on the everything. Okay, so what you're supposed to do is you have to ensure that the salary register is matching with the details which you have already submitted to the ESA and EPF department, because we file the returns, we make the payment and file the returns. So there should not be a difference between the informations which you have provided to the ESA EPF department and the data which you are maintaining in Tally or in some other accounting application. Both the records should get matched. Okay, and especially you should not have the wrong accounting heads. For example, I'm making some payment as allowance. There is a difference between paying as allowance and meeting out the expenses. Okay, for example, I'm just making some food arrangements for the staffs and making some refreshment like tea, coffee and evening snacks for the staff members. So it is nothing but the staff welfare. Okay, instead of maintaining this as a staff welfare, if I maintain that as a food allowance, so allowance is amount given to the employees along with the salary, right? Similarly, conveyance is different, travel allowance is different. So for everything, separate accounting heads should be maintained. Okay, you are making payment or you are providing the food within the organization makes such a big difference. Okay, if you are providing food within the organization, that will not be treated for the ESIPF calculation. But if the amount is paid to the staffs as allowance, right? So that is going to give a big difference. So better you have to consult your ESIPF consultants or your tax consultant or your senior accountants, even your chartered accountants, to identify the respective heads we can use for the accounting treatment of employees' additional benefits. Okay. Suppose if there is any demand notices from ESIPF department, as similar to income tax, you try to account that liability in the books of accounts so that we will not miss it out. Sometimes we will be receiving notices from various departments or for various financial year also. So there is a possibility we'll be having an intention to make the payment, but we will forget it because we have not accounted in the books of accounts. We cannot identify it. To avoid this situation, better you file and also you account it in the books of accounts so that it is identified for the future also. And coming to the main area, that is fixed asset management. We have a lot to discuss about it, but due to time constraint, we have selected few topics. Every topic we can discuss in the separate session. If possible, we will arrange for the same. Now coming to fixed asset management. See, coming to fixed asset management, there are various areas you have to address. One, you have to ensure that the opening balance is correct as per the last financial year. Okay. Number two, whatever the assets purchased during the year, so you ensure that the bills are available in the file. Okay, so for the namesake, you should not account the assets. Okay, so because you are going to claim depreciation, depreciation is going to reduce your profit. Reduction in profit is nothing but reduction in the income tax also. Suppose if you account the fixed assets which is not, for which the proper bills are not available, that means again you are coming to the tax evasion area, right? Just to avoid income tax, you are creating assets and you are accounting depreciation and you are reducing profit. Finally, you are reducing the income tax also. It will be considered in this way. So to avoid that, if you are buying some assets, better you get some bills for such assets, because by seeing the date of bills, the depreciation amount will vary, depreciation period will vary. First 6 months, next 6 months depreciations will be calculated. Similarly, if there is a deletion of assets from your books of accounts, you ensure that you remove the assets from your books of accounts. There is a high possibility we'll be selling our old cars, old furnitures, etc. So you have to report it to the chartered accountants that you said you have removed such assets from the books of accounts. Okay, sometimes they can identify it. Suppose you're selling your old car and you're getting money 1 lakh, 2 lakh in your bank account, they can easily identify and they can raise a query and they can account it properly. But if you don't account it and if it is not affected your bank account, if you don't account it properly, they can also, it is not easy for them also to identify and delete from the books of accounts. Okay, so you have to remove the assets which is not physically available in the organization, and also try to group the assets as per the blocks. Okay, so I've seen a company which is having more than 20 to 50 assets. Okay, so they'll be having 4 or 5 buildings, 4 or 5 machineries, 4 or 5 type of computers and printers and vehicles, etc. So everything will be available in the balance sheet, fixed assets as a single group. Instead of that, you can have a subgroup. Okay, most of the time your reports looks very much attractive if you create proper subgroups. I can have it as computers and accessories, plant and machineries, land and buildings, vehicles, okay, furnitures, electrical fittings, kind of a grouping you can maintain, so that suppose if you don't have the knowledge of the grouping as per the blocks as specified in the income tax, so not a problem. But you can have as per the nomenclatures, as I said, land and buildings, All the land and buildings, you can put it on the land and buildings group. All the computers, printers, and the accessories related to the printer, which is treated as the printer and computer laptop, which is treated as an asset, you can put it under the group of computers and uh, accessories. See, it is not only for the department's sake I'm talking about, even for the reporting purpose. It is some emergency reason, if you want to identify particular assets value, instead of reading all the assets available in the balance sheet fixed assets group, and you take every figure and use calculator or put it in the Excel and you then add and tell the exact figure of fixed assets, it's better to maintain a separate groups for the fixed assets, right? So coming to the main area, stock management. So you know very well, there is a possibility in Tally, if you maintain the stocks properly, you can identify the exact stock value. And the stock values are given very much important, equal to the capital. As I said, like capital is nothing but the wealth of the proprietor. Stock is nothing but another wealth for the organization. Okay, so if you maintain the stocks properly, if you are able to identify the total stock value, and in case of crisis, in case of poor working capital, you can manage with the stocks. You can take a lot of decisions with the help of stocks, but you ensure that the physical stock is properly maintained and the values are properly mentioned in the books of accounts. There are many areas it's going to help you. One, internally, to take some decisions to make the organization profitable. Suppose organization is suffering with poor working capital, there is a high possibility they can sell out some of the stocks which is lying with us for a long time, or some of the stocks are not some of the stocks are getting expired in the near future. You can take some decision and you can sell it for the cost price also to get some quick money. So that kind of internal problems will be solved if you maintain the stocks properly. As far as finalization concerned, see, if you have some stocks and if you have some OCC OD account with the banker, there is a possibility the records you will be submitting to the bankers also. Based on the stock value also, some companies are getting OD loan facilities, OD and OCC loan availments will be there. So if you find out exact stock value, that it's going to help you to get proper loans at the less prices also, sometimes less rate of interest. And if there is anything like goods delivered already and bills not issued, or if there is anything like goods received from the suppliers but bills not accounted, you can identify from the P&L and you can account it accordingly, so that the stock value also will go up. Anyway, stock value will go up if you account delivery note and receipt note, but the supplier value and customer value also will be added accordingly. Now, very important, and the final topic now I'm going to discuss is about loans and advances. This is also nothing but an asset to the organization. Okay, so you categorize the loans and advances. I have seen in so many places, for example, they pay some rental advances to the landlord. Okay, so they don't mention the name of the landlord. I know a company which is running for more than 30 years, and this 30 years they had opened more than 15 branches all over the state. Okay, so whenever they make a, they hire a new place, they make a rental advance. They use a single ledger rental advance, again rental advance. Okay, instead of creating single ledger and using it for every new landlord's rental deposit, you create a ledger with a name: rental advance RAM, rental advance Chennai property, rental advance Tirupati property, Tirupati branch, kind of a nomenclature you can use it. So this helps you to identify how much is the rental advance you paid to the respective landlord. Sometimes the landlords, if you stay there for a long time for a commercial property, they'll ask for some more rental advances. See, what happens is now we are not able to identify this kind of accounting treatment. You will not be able to identify how much is the rental deposit you have paid to the respective landlords. So you have a separate name for the advances paid to the landlords. I've seen so many books of accounts which is still having a telephone deposits, GST sales tax deposit, APGST sales tax deposit, TNGST sales tax deposit. So kind of a deposits are no more existing. Okay, EB telephone departments. See, when we are taking a telephone connections 10-15 years before, we used to pay some deposit. That's a big amount, 5,000, 10,000 kind of a deposits we make. Okay, even if they are not using the telephone connection now, but still the particular telephone deposit is available in the books of accounts. So these are all the information we have to report it to the chartered accountants. We have to report it to the tax consultants. At least we can help them to remove that kind of advances from the books of accounts. Okay, there is no sales tax deposit. Usually we used to pay sales tax deposit earlier before 15 years and all. Okay, maybe a Tamil Nadu or Andhra sales tax department will be paying some deposit. All those deposits are no more existing. Even in the electricity board, when we are taking a commercial connection, we pay some deposit. The deposits will be evaporating. That will be debited in your account by the EB for the excess usage of the electricity. Periodically, they collect the amount as advance deposit, they debit it from your deposit account. So you have to find out the respective area where we are paying the deposit, whether it is still existing or it is already debited from your account. If it is not existing, better you remove from the books of accounts. Also, there is a high possibility companies will be giving advances to the staff members. So if the advances are paid to the staff members, we have to ensure that it is accounted properly. Sometimes we'll be adjusting on the next month's salary, but sometimes it will continue and every month a small portion will be debited from the salary. In such cases, you have to ensure that the particular advances are still lying with the particular staff members. It should be accounted properly. We have some more topics to discuss about finalization, and we will discuss on the coming sessions. Right now, this is the time for the ending the session, and in every session I used to show this picture. That is, in Tally, you can do customization. Your invoices and your reports you can customize. Whatever the additional fields you want to bring it to your invoices and your returns, reports, etc., you can bring it through the TDL. TDL is nothing but the Tally definition language. So we Asset Integrated Info System will do TDL, and we'll help you to design your invoices as looks here. Okay, so this is a sample. So you can find, of course, that invoices available in Tally looks so professional, but still if you want to add your company logo, color patterns, if you want to change some fields on the invoices for your convenience, you can do customization. It will be for the minimum charges, and you can customize and you can use your invoices as per your wish, right? Even on the header footers you can have as per your wish. In case if you want to keep the seal and signature also, you can have it. Instead of taking a printout and then signing and sealing, you can generate the PDF copy with the seal and signature directly from Tally. You can reduce your time and you can directly send invoices to your customers through email and also through WhatsApp integration, right? So you just get in touch with us for all these requirements, and we have an additional division called tallyhr.com that is for the accountants community to source their job and also to the business owners to source their accountants. So we help them as a platform. We connect both accountants and the business owners to get benefited. Get in touch with us for the placement supports and also to recruit your best accountants. You can go through our website www.tallyhr.com, and I have another announcement that is for the Tally ERP9. Okay, so whoever is using Tally ERP9, it is the right time to shift it to TallyPrime. See, it is not easy to maintain our statutory compliances through Tally ERP9 because Tally company itself is going to stop the support for Tally ERP9. So only the recent TallyPrime, the releases like 5, 5.1. Now we are going to expect release 6 near future for our GST compliances on the enablements on the banking features, auto reconciliations, and the much additional features are awaited in the release 6. So it is better to use Prime instead of ERP9. Still, if you are using ERP9 or your friends are using ERP9, this is the right time to convert yourself to Prime. So the prices are slashed for the convenience. This is the right time because this is the end of financial year. At least from the new financial year, you can try to maintain your books of accounts in the TallyPrime to use all the statutory compliances with the reason amendments. So that will make you to, that will ensure that you are filing the returns without errors. Okay, so it is just 2,250 plus GST for the single user users and 6,750 plus 18% GST for the multi users. Okay, gold users. Then they can convert themselves to Prime. So once you are converted to Prime, it is not necessary to make the payment subscription for the next 1 year. Okay, so it is the right time. Thank you very much for all your support, and we'll be meeting on Thursday with an interesting topic.
Thank you very much.